Welcome to this deep dive, crafted specifically for you. Today, we're really zoning in on NCC Ltd.
Right, the Indian Infrastructure and Construction Company.
Exactly. We've looked through their annual reports for FY23 and FY24, the AGM notice, an investor presentation, and importantly, their latest earnings call transcript from Q3 FY25.
A good mix of sources.
Yeah, and the goal here is really to get a clear, concise view of where NCC is right now. You know, its potential, but also the challenges it's facing.
Makes sense. Let's get into it.
Okay, so NCC, they're a big name, been around a while.
Oh yeah, long history. Started as a partnership back in 1978, became limited in 1990, then listed in 92. So decades of experience in this sector.
That longevity definitely counts for something, and their operations are quite broad, aren't they?
Very diverse. Looking at FY24, buildings and housing was the biggest slice, about 44% of revenue. But they're also active in transportation, water, and environment, which is increasingly important, you know, with things like the Jal Jeevan mission.
Right, big government push there.
Exactly.
Yeah.
And then you have railways, electrical. They've got a significant order book there, focusing on T&D.
Transmission, distribution.
Right. Plus irrigation, mining, metals, tunneling, even some real estate and international work.
The diversification, it seems like a core strength.
It certainly can be. You know, cushions them if one sector slows down. But it also means managing a lot of different dynamics.
And the industry itself, it's pretty competitive, I gather.
Highly fragmented. The top 10 players only hold about, 20% of the market?
Yeah.
So, yeah, competition is fierce. NCC seems to emphasize things like quality, safety, innovation, and increasingly sustainability to differentiate themselves.
And the general backdrop for infrastructure in India looks pretty positive right now.
Definitely. The government's focus through the National Infrastructure Pipeline is a major driver.
Yeah.
You see massive investment planned for railways, roads, urban development, water infrastructure, and the power sector too, especially renewables and modernizing the grid. It's a fertile ground for a company like NCC.
Okay, let's dig into that growth potential then. FY23 really stood out in the reports.
It really did. That was their highest ever annual order inflow, nearly 26,000 crores.
Wow.
And the order book crossed 50,000 crores for the first time. That showed huge demand back then.
And that carried through to FY24.
Yeah, the order book was sitting at a healthy 57,500 crores approximately. Buildings led the way, but electrical also had a strong showing, so growth wasn't just in one basket.
And looking forward to FY25, what's the target?
Management sounded confident. They're targeting a minimum of 20,000 crores in new orders for fiscal 25.
Okay, so still aiming high.
Seems so. And they've had some recent wins too, right? Q3 FY25.
Yeah, two big ones in Maharashtra totaling around 5,700 crores.
And one in Bihar, about 2,300 crores.
Plus, that meter installation project in Bihar is actually happening now, about 3 lakh meters installed, so projects are moving.
Good sign. And the pipeline they mentioned, 2.4 lakh crore potential, including possibly some large expressway projects.
And they were L1 lowest bidder on projects worth around 9 to 10,000 crores as of February this year.
So yeah, paints a picture of a company with a lot on its plate and actively chasing more work.
Okay, but let's talk risks. No company operates without them. What are the main challenges for NCC?
Well, a key one flagged in that Q3 FY25 earnings call was a payment slowdown.
Ah, okay.
Yeah, delays from various government schemes and states. And that, understandably, impacts how fast they can execute projects. They even mentioned the elections as a contributing factor.
That kind of delay hits working capital, doesn't it?
Absolutely. It can really strain cash flow and maybe even impact their ability to ramp up new projects.
Makes sense. What else?
There's also some uncertainty around margins in their newer business segments. As they diversify, it just takes time to figure out the profitability there.
Right, settling in period.
Exactly. And like many construction firms, they're involved in legal disputes. Contract stuff, claims, counterclaims. Management says they don't expect a major negative impact, but
It's always a risk factor.
it is. Plus, contingent liabilities, disputed taxes, that sort of thing under appeal, potential future payouts.
And that Amaravati Capital City issue still lingers.
It does.
That-
Significant receivables tied up there, over 112 crores as of March 2024. Progress in payments have been slow since 2019. Management sounds confident they'll recover it, but it's been a drag for a while now.
Yeah, those are definitely things to watch. So shifting gears, what about the people running the show? Management quality.
The board seems well-structured, a mix of executive, non-executive, and independent directors with varied backgrounds. The reports give details, and they state they comply with the Companies Act and listing rules on board composition.
Seems standard good governance practice?
Yes, and they have a formal code of conduct, which directors and senior management affirm annually. That signals a commitment to ethics. Plus, the usual board committees are in place. Audit, nomination and remuneration, CSR, ESG, risk management. The audit committee, notably, has financially literate members.
Important for oversight.
Crucial. And the board seems active, held 8 meetings in FY24. They even mentioned reviewing individual director performance based on contributions.
Accountability focus. So, how has this leadership performed? Let's look at the track record and how their guidance matches up.
Well, FY23 was certainly a strong year financially. Remember that 40% jump in consolidated revenue?
Right, pretty impressive.
And profitability was up significantly, too. Net profit jumped 65%, excluding a one-off item from the previous year. That shows a period where they were really executing well.
And FY24, revenue was solid, too.
18,439 crore. Solid, yes.
But more recently, that guidance revision for FY25.
Ah, yes. That was notable. In the Q3 FY25 call, they revised their full-year revenue growth guidance down quite a bit, from over 15% originally down to around 5%.
That's a significant shift, likely tied to those payment delays we discussed.
Seems very likely. It suggests those headwinds are having a real impact on near-term top-line growth.
But they expect Q4 to be better.
They indicated they expect Q4 FY25 to normalize somewhat, projecting a margin around 9.5%. So maybe anticipating some recovery towards the end of the fiscal year.
It's worth remembering that order book growth, though. Even with slower revenue recognition now, the backlog is substantial.
Absolutely. A strong order book provides a foundation. And they have been consistent with dividends paid out over 138 crore in FY24. That's a direct return to shareholders.
Okay, let's peek under the hood a bit more. Balance sheet and cash flow health.
Looking at FY24 versus FY23, total assets grew. About 15.6 thousand crores to 17.3 thousand crores.
Okay.
Inventories also increased, which could reflect that growing project pipeline. Trade receivables, interestingly, decreased slightly.
Despite the payment slowdown.
Yeah, maybe some improved collection in other areas or just timing. But we know delays are still a concern overall. Investments were up too, mainly from buying a bigger stake in a subsidiary.
And debt levels.
Total borrowings were around 1,000 crores as of March 34, 2024. They mentioned monitoring net debt to equity, which is standard practice for managing capital structure.
What about cash flow?
The FY24 statement gives the usual breakdown: operating, investing, financing activities. Provides a view on their liquidity. Working capital did increase between September and December 2024.
Consistent with slower payments, maybe.
Could be a factor, yeah. And retention money, the amount held back on projects nearing completion, was about 1,757 crores in February 2025.
All right. Now, the sensitive topic, any red flags for potential financial issues or fraud. What about their credit rating outlook?
Well, their statutory auditors are S.R. Batley Boy and Associates, a well-known firm. That provides some assurance. They also have a cost auditor.
And internal controls.
The company states they have adequate internal financial controls for their size and complexity. The audit committee plays a key role here, overseeing reporting, auditors, related parties, controls, risk.
Checks and balances.
Exactly. Importantly, they state they haven't been declared a willful defaulter, term loans were used as intended, and they haven't used short-term funds for long-term purposes. That's all positive. Their capital management aims to keep costs down and maintain or improve their credit rating.
Okay, sounds like the standard checks are in place. Finally, let's tie it back to the shareholders. How is NCC creating value?
Their stated commitment is enhancing shareholder value over time. The strong FY23 results definitely contributed.
And the dividends?
Yes, the regular dividend payments are a tangible return. Yeah. EPS, earnings per share, increased to over 10 rupees in FY24. Book value per share has also been growing.
So key metrics trending positively.
Generally, yes. They also provide shareholding pattern details, and a high percentage of shares are dematerialized, which helps with liquidity for investors.
Okay, so let's try and sum this up. NCC is a major infrastructure player in India, operating in a sector with significant government support and growth potential. They've shown strong order book growth.
Definitely a key strength.
And solid past financial performance. But they are facing real headwinds right now, particularly these payment delays, leading to that revised revenue guidance for FY25.
Right. There are also risks around newer segment margins and the lingering Emirati issue.
Their financial health seems broadly stable based on the reports. Governance structures appear to be in place, and they do have a history of returning value to shareholders via dividends.
It's a mixed picture in the near term, balancing a strong long-term position with current operational challenges.
Which brings us to a final thought for you, our listener. Considering that revised lower revenue guidance and these ongoing payment issues, how might these near-term pressures influence NCC's longer-term growth path and shareholder returns?
Yeah, and what deeper analysis of their actual project execution efficiency, maybe their working capital cycles, would give you a more complete picture to form your own view on NCC.
Exactly. Something to think about. We encourage you to use this deep dive as a starting point. Look into the financials yourself, track project news, keep an eye on those industry trends. Thanks for joining us on the deep dive.